If you try to trade every random 5-minute candle pattern that appears on your screen, you are likely to find yourself losing capital inside market consolidation. We are going to address that. By the end of this video, you will know how to build a high-probability propulsion reload trade, taking it from a completely blank chart all the way through to a managed execution. To follow along, you need 3 things: an active TradingView account, a 5-minute chart of the NQ or ES index, and the DRW engine indicator applied to your canvas. Layering higher timeframe context over local momentum helps filter out the noise and allows you to position yourself alongside institutional order flow. Step 1 is defining our environment. Start by looking at your 5-minute chart and locating the large, shaded 1-hour higher timeframe order block box. Notice the boundaries of this zone. You have an aqua line marking the top and a fuchsia line defining the bottom. The most important level is the center. This diagram represents the 50. Entering on the base displacement often leads to being caught in the initial retrace. The base displacement indicates that the technical conditions for institutional expansion are being met. It is a prerequisite for a setup, not the entry itself. After the base displacement prints, wait for the minor price pullback that often follows. Your true entry signal is the appearance of the blue NC label, which identifies a propulsion block. Accompanying this NC label is a dotted orange line. This is your critical trigger level. This staircase pattern illustrates the algorithmic logic. At this stage, positions are being added on shallow dips, refusing to let price drop back to a deep discount. Waiting for this confirmation aligns your entry with the phase of the trend where high-velocity momentum is most likely to expand. Now we transition from analysis to the mechanics of the trade. Place the buy order exactly at the 50% mean threshold of the NC block, the dotted orange line. Next, direct your attention to the top right corner of your screen. This panel displays your risk payload. It calculates exact contract sizing based on your account parameters, ensuring your position size is mathematically consistent. Place your stop loss at the invalidation level shown on the HUD. This protects your position at the opposite side of the trigger candle. Set your take profit orders using targets labeled 1R, T1, and T2. These align directly with the buy-side liquidity pools on the chart. Utilizing the HUD's calculations moves the process from a speculative chart reading to a structured execution plan. When the setup holds, price taps the entry line and accelerates upward, moving through target 1 and target 2. To recap the visual checklist, validate the yellow line, identify the base displacement triangle, and wait for the blue NC propulsion trigger. Open your own charts, turn on replay mode, and practice identifying this sequence. If you would like the indicator layout, please comment below. Mastering this 3-step framework provides a specific, repeatable logic for interacting with price action.